Welcome to this week's edition of On the Money with Secure Money with Brian Quaranta of Secure Money Advisors. I am Rebecca Powers. So happy to be with you again this week. Thank you to all of our regular viewers and welcome to our new viewers. Hello, Brian. Great to see you.
Rebecca, great to see you as always.
So much to talk about.
Yes.
So many of the comments and why people love you, Brian. You send this wonderful book just by going to onthemoneyoffer.com or calling the number that you see on the screen. You can go ahead and get this book shipped to you, very short, easy to read. Why is it so important that people understand the basics of retirement, and why did you feel it was so important to educate them about it?
Because fundamentals matter, and keeping it simple matters. And I think the problem that we deal with in today's environment is that there's so much noise in the marketplace,
Yes.
right? You know, you get online, you can read about, 10 different opinions about how to retire or how to do something. You could go see 3, 4 different advisors and possibly get different opinions. So
Right.
I wanted people to have an easy book to read to basically lay out the facts and a step-by-step guide to help them get on the right track and retire when they want to. Because a lot of people today are not retiring because they're not even sure if they can do it. Because
Right.
they're not getting pensions, so they're just kicking the can down the road, wondering, is the day ever going to come that I'm going to be able to retire? And the one thing we do really well is teaching them through basic math how they're going to be able to retire and stay retired.
All right, let's talk about the book. Chapter 1, investment plan versus retirement plan. Do you have an in-writing retirement plan? And most people, you say that come in, don't.
Yeah, and this really goes to one of the basics that I talk about in the book, which is the accumulation phase versus distribution phase. And what I mean by that is in your working years, you have one goal, and that is to put as much money away as you possibly can, save as much money as you can. Risk really doesn't matter in your accumulation phase because you have time
Right.
before you're going to need your money. So the goal is to grow that pile of money as big as you possibly can so that when the day comes that you're ready to retire, that money's there for you to be able to use. But the mistake that people make is there's a fundamental shift that needs to take place. They need to go from the accumulation phase to what we call the distribution phase. This is when their money is going to start working for them. And the strategies and techniques that you use are different than the investment planning strategy. So investment plan versus retirement plan, it's because investment planning strategies are different than retirement planning strategies. And there's 5 areas of retirement planning. There's income, there's taxes, there's investments, there's healthcare, and there's your legacy. So I write about them all in the book, and it really is just a simple guide to help people through this whole retirement thing.
Do you think, or of course you know, do you turn on, do you go to the second phase, I guess, the day they retire, or would you rather them come in 5 years or 10 years before they retire?
That's a really great question. So your distribution phase is going to start about 5 years out, right? That's
Okay.
when you really have to start thinking about, okay, how are we going to get this money to start working for us? And how much of this money do we need working for us? So the big question you have to ask is, with the income sources you're going to have in retirement, which for most people is just Social Security,
Right.
is that going to be enough money? If it's not, the question is, how much more money above and beyond Social Security are you going to need? Once you start to figure out that math, we can back into it and figure out, okay, how much money that I have saved right now, how much of that money do I need to set aside for a strategy for distribution? And that's exactly what we help people do. And again, it's detailed in the book to help people understand exactly how to do it.
All right, chapter 2, you mentioned the word pension, and my ears perked up.
Yeah.
Chapter 2 is think like a pensioner, not a gambler. Extremely important.
Yeah. Well, think about it. If you're invested in the stock market, there's a lot of unknowns. You have no idea how the investments that you're investing in are going to perform on any given year. And as you get closer to retirement, that volatility really matters.
Right.
Taking a big loss before retirement can prevent you from retiring on time or even cause you to have to delay retirement. Or maybe you do retire and you continue to invest in the stock market and you have 100% of your money at risk and you take a loss. Maybe now you have to come out of retirement because you can't afford to stay in retirement, because if you were planning on taking money out of your accounts and you've lost a large portion of it now, the probability of you running out of money now is much higher. Right. And these are the things that people need to protect themselves of. And that's why I say, think like a pensioner, because a pensioner thinks about the monthly income. A pensioner thinks about, how am I going to get the monthly income that I need without risking my principal. And that's exactly what we teach people how to do at Secure Money Advisors, is how do I protect the principal and get the income I need so that it's not only protected for my life, but if I die, protected for my spouse's life. And if my spouse dies, any balance, of course, would pay to your family.
Absolutely. All right, we're going to show you this book again, Right Track Your Retirement. Call that number on the screen, 888-382-1298. You can always go to onthemoneyoffer.com. This book, very short, easy to read, as I said, and you can also make an appointment to meet with Brian and his amazing team. How important is that first appointment? Why do you do it absolutely free? Talk about Morningstar and all these amazing reports that are non-biased, black and white.
Yeah. Well, first off, the Right Track review is about 5 key areas. It's about getting your income right. It's about having an investment strategy, a tax strategy, a healthcare strategy, and an estate planning strategy. Until you have all 5 of those areas completed, you don't have a retirement plan, because those are the most important areas that you have to take care of. The number one most important is obviously your income, because when you stop working, the paycheck's going to stop, but the bills, the taxes, and the money that you need to do all the things you want to do in retirement, that's not going to stop. So we have to have a process and a system, and that's exactly what our Right Track review is. It's a system. It's a process to help you get clarity around exactly what to do. And when you come in, if you have concerns about when do I take my Social Security, or maybe you're like a lot of people we meet and they say, I'm at a point in my life where I can't afford to take another big market loss, or I don't have a pension and I'd like to find out how to create one for myself. Or if I die, I want my money going to my family and not to the IRS. These are all the things that we can review with you when you come in. So call 1-888-382-1298. You can schedule that appointment right now. My team is standing by to take your call. Or you can go to onthemoneyoffer.com, where you can schedule your appointment there also, and you can also request a copy of the Right Track Retirement book. So go there right now. Don't wait. It'll be worth your time.
Yes, and Brian even pays the shipping and handling, so you don't have to put in any information other than if you'd like a time to go meet his amazing team. All right, stay with us. We're talking about right tracking your retirement with Brian Quaranta. We'll be right back.
See, everybody can tell you how to invest your money. There's not a lot of people out there and a lot of firms that can teach you how to use your money. Most people will also tell you that they're scared. And the reason they're scared is because they're afraid of running out of money.
The last thing you want to do is have a really good job into your 60s, retire, and be looking for work again in your late 70s.
The average person might say, well, a good portfolio would be a good mix of stocks, bonds, and mutual funds. No, 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 no. A good portfolio is all designed around the 5 key areas: income, taxes, investments, healthcare, and legacy planning.
We're not just product pickers here. What we do best here is we build retirement plans.
9 out of 10 people, when they walk through the door, would ask us, we just want to know if we're on the right track. And I always say, if you're not on the right track, when would be a good time to know it? Probably now.
People, can actually see a vision once we start to really build out their plan.
This is about you. If you're not getting what you need, and you feel that when you walk out of the advisor's office, it's time to get a second opinion. And you can't get a second opinion from the person that gave you the first opinion. The difference at Secure Money Advisors, as a fiduciary firm, we help you manage the risk, build the income, and give you the retirement you dreamed of.
Hi, welcome back. I'm Rebecca Powers here with Brian Quaranta. We are talking about your retirement. Brian is the CEO and founder of Secure Money Advisors. The number on the screen is the number you need to call during this broadcast. We're going to send you this wonderful book, very short, easy to read, how to right track your retirement. You can also get an appointment. There really is no cost, no obligation. It seems too good to be true, but trust me, it is not. It is.
Yeah, we've been doing it for a long time.
Yeah.
It works well.
It does work well.
There really is no risk on them coming in. The risk
Right.
is just the time you take out of your day. And look, I don't know if we're actually going to be able to help. I don't even know if what we do is going to be the right fit for you. And when you come in and we sit down, we'll ask you what your biggest concerns are and your biggest frustrations that you're dealing with. And we'll talk about that a little bit, and we'll share with you some of the systems and processes that we use to solve these problems. And if we feel that it's a good fit together, we could talk about what that would look like. But if it's not, we'll be very upfront with you and let you know that. So it's really it's a risk-free environment. And the one promise that I always make to people is nobody from my team's ever going to pressure them to do anything or try to sell them anything.
That's right. It really is. I think the only homework you have before you go into their office is dream and think, what does my perfect retirement look like? Whatever you want it to be, then they're going to kind of reverse engineer to get you there. We're talking about your book, because a lot of people love it, and they have so many great comments that we get up by email. Chapter 3, leverage the power of the 2-bucket strategy. You're all about keeping it easy, keeping it simple, stupid, as they say. So let's talk about the 2-bucket strategy.
Well, the 2-bucket strategy is a basic fundamental planning strategy that truly takes the stress and anxiety out of retirement. Here's the one thing that we absolutely know about the stock market. Nobody knows anything. I can promise you that. Nobody knows anything. Nobody knew the pandemic was coming. Nobody knew that these rates were going to be increasing at, record paces.
Right.
There is absolutely one thing we know about the stock market, and that is none of us know anything. Right? And that's true. And anybody that's out there telling you they do is just trying to sell news, or it's clickbait. Okay.
That's right.
Here's what does work. What does work is time in the market. And if you look at any 15-year, 20-year time horizon, the market has a trending line upwards. Okay, so if it's got a trending line upwards over a 15 to 20-year period, how does the 2-bucket strategy work? Well, essentially what you're doing is you're carving out enough money from your retirement to set into the first bucket to generate income or your cash flow for 15 to 20 years. Why is that important? Because the money that we do keep in the market has to be long-term 15 to 20-year money. The mistake that people make is that they keep it all in one bucket, usually the stock market, and they try to withdraw money from those accounts no matter what's happening in the market. And if you're withdrawing money like most people are on a monthly basis, one month you might withdraw money and the stock market might be up. One month you might withdraw money and the stock market might be down. And when that money comes out of an account that's already down,
compounded loss.
Compounded loss. And folks, the losses will hurt you more than the gains will help you. Let me say that again. The losses will hurt you more than the gains will help you at this point in your life. And that's why it's so important that you have to have a system and process, and that's exactly what the Right Track system is all about. And when we do the Right Track review with you, we'll be able to determine whether or not you're on the right track, and if you're not, point you in the direction of how to get there.
Yeah, it's so important. And I do want to touch on that Morningstar report, because that first meeting, you pay a lot of money for these third-party, wonderful reports.
Right.
It is non-biased. It is black and white. You punch in all of their wonderful information, and what comes out is their true risk, your true fees and hidden costs. Just touch on that before we go to Chapter 4.
Well, look, as a fiduciary planning firm, we are very transparent. By law, we have to be.
Higher standard.
There's a higher standard that the fiduciary is held to. And so it starts with understanding where you currently are. Think about it. If I had an issue with my back and I went to a doctor, I would hope that that doctor would just start cutting. Right? Or recommending surgery.
Right.
I would hope that that doctor would evaluate first and do an MRI and x-rays. And that's all we're doing with the technology that we have. We're essentially doing an MRI or an x-ray so we can see exactly where things currently are. And then from there, we can make a diagnosis of what to do and how to improve the situation. But you don't know what you don't know.
Right.
And until you have that evaluation, you really don't know where you stand. And for a lot of people today, they really don't know. If you ask them, and I'll just ask you, if you're watching right now, think about this. Are you 100% confident that you're on the right track? If you weren't on the right track, when would be a good time to know? So this is why I highly recommend you go to onthemoneyoffer.com, get a copy of my book, and also schedule a time to come into the office. If you have concerns about when to take Social Security, maybe you don't have a pension and you want to learn how to create one, maybe you're like most of the people we talk to and they tell us they can't afford another big market loss, Go to onthemoneyoffer.com, get a copy of the book, and schedule an appointment there. Or you can just call right now, call 1-888-382-1298, and my team's standing by to take your call and get you scheduled.
And you're so passionate about empowering people that he really will even pay for the shipping and handling. So it's a great start to kind of read that book before your appointment. All right, chapter 4, protect yourself from market swings.
Yeah.
Again, we don't have a crystal ball, so you have to protect. Don't just keep rolling the dice.
Yeah. Here's one thing for sure that we do know. The market will always go like this.
Yeah.
It never goes up in a straight line. And so again, it's all about time. It's all about the fact that when you are further out from retirement, these market swings don't matter much. But as you get closer and you're getting ready to start using your money, these market swings make a big difference. Now, here's what's interesting about the world of financial planning. You'll hear things like, on average, the stock market has done 10%, right?
Okay.
And what's interesting is that what they're talking about is a 100-year average. But you see, everybody's retirement is going to be completely different.
Right.
So think about someone retiring at the age of 62. What's the next 20 years of the stock market going to look like for them? Think about the person that retired in 1999 and went through 9/11, went through 2007, 2008, went through the pandemic, all this stuff.
Right.
And we meet these folks, and some of them are doing okay, but some of them are very close to running out of money.
Wow.
And unfortunately, if you get to the point to where you're running out of money, there's not a whole lot a financial advisor can do to fix that problem. And the worst day of retirement's not the day you run out of money. The worst day is when you figure out you're going to run out of money, and there's nothing you can do to stop it. And that's why you want to have a good system and a good process. You don't want to look at retirement planning as just buying a diversified portfolio of stocks or bonds or mutual funds. There's more to it. As I've mentioned, there's 5 key areas. There's your income. There's your investment strategy, your tax strategy, your healthcare strategy, and your estate planning strategy. And these are all things that I write about in the book, and we go over with you on the review.
And since you made that wonderful medical analogy, isn't it great, even if you're happy with who you're using now, to get a second opinion? You can't get a second opinion from the person who gave you the first.
That's right. You cannot. Absolutely. And a second opinion is great because here's what it can do for people. And this does happen at our office. There's people that come in and we review and we do the MRI or the X-ray, through our technology where we can tell you what risk you're currently taking, the return you're getting for the risk that you're taking, the fees that you're paying. And when we do that, it gives you the clarity to be able to make good decisions. But you may find out that you are actually on the right track and you are doing the right things. And what peace of mind you get when you get that confirmation.
And you told me you love those moments.
They're great moments.
And you also love when you say, and they, can I retire? And you're like, oh, you can retire right now.
Yeah.
That's your other favorite moment, right?
Yeah. Retiring right now is my favorite thing. And I always ask, if I can get you retired right now, would you do it? And I'll tell you, people go into a panic because they think they're ready to retire until they're put on the spot to retire. And they start thinking, they're going, geez, I don't know if I can do this. I don't know. So I always say, let's build the plan so that you can retire.
Right.
So that the day you walk into work and you don't want to be there anymore, you already have the plan to exit. And that's real strength and power to have when you're in your last few years of your career. So folks, go to onthemoneyoffer.com, get a copy of the book, schedule a time to come in and meet with the team. My promise as always is that nobody from the team is ever going to try to sell you anything. Nobody's going to pressure you to do anything. As a fiduciary firm, we're here to help you solve problems. We want to identify problems and we want to solve problems. If there's no problems to solve, we will shake hands and part as friends. So go to call 1-888-382-1298. You can schedule with the team right now, or again, go to onthemoneyoffer.com. And not only can you request a copy of the book there, but you can also schedule your right track review right there. So don't hesitate. Take advantage of this. This is not the time to kick the can down the road. Take action now and find out whether or not you're on the right track.
Absolutely. And stay with us. We'll be right back. You can also see that QR code. Just aim your camera right at it, and it will take you to our landing page. Stay with us more on right tracking your retirement. So important. We'll be right back.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to On the Money with Secure Money. The name of the show has the word secure in it because that is most important. Secure, preserve, protect all that hard-earned money. All right, we're going to go to Chapter 5 now of the book. If you're just joining us, Right Track Your Retirement. We will mail you this book, even pay for the shipping and handling, because it is that important for you to understand the very basics. You also get that complimentary appointment to meet Brian and his team. Chapter 5, use new technology to profit from market returns.
Yeah. So
talk about that.
Look, there are ways that when the market goes up, we can make money, and when the market goes down, we don't lose any money.
Yes.
And the first thing that somebody will say when you tell them that is, there's no way, that's too good to be true.
Exactly.
Well, actually, it's not. This account that I'm talking about has been around since 1995, and it's called an indexed annuity.
Yes.
And it does two very important things. It guarantees and protects your principal, but gives you some upside potential if the market goes up. So let's suppose that the market goes up 10%, okay? Well, the catch with these accounts is that you're not going to get all the gains.
Right.
So why are you not going to get all the gains? So maybe you get 70% of that gain. So it goes up 10, you get 70% of 10%, that's 7%.
Right.
Okay, so now your 100,000, if you had 100,000 in there, goes to 107,000. That becomes your new guaranteed locked-in balance. It can never be taken away. Once you make it, you keep it. Now, what happens if the stock market goes down? Well, if the stock market goes down, let's say the following year, and let's say it goes down 25%, all that happens is you still have $107,000. You get a zero. We say zero is
your
our hero. And so why is that? Because we're willing to give up some of the upside to protect the downside. And ask yourself this, folks. At this point in your life, are you more inclined to take a sure thing or a maybe? Most people that I talk to will say, I would rather have close to a sure thing at this point because I don't get a second chance at this. It's not a dress rehearsal. You know, think about the folks that were retired before 2007, 2008. And right in 2007, 2008, a lot of these people lost half of their money.
Yeah.
And a lot of those people had to come out of retirement and go back to work because they were never going to be able to afford to stay in retirement. You see, if you go back 30, 40 years ago, nobody had to worry about that because when you retired, you got Social Security and you got a pension. So if you did have money invested in the stock market, that was long-term money. You weren't using it to live off of. That's not the retiree today. The retiree today needs a portion of their money to live off of. And so what you have to do is you have to think like the pensioners used to think. But now you've got to create your own pension. And that's exactly what we show you how to do at Secure Money Advisors. Not only create your own pension, so you have a stream of guaranteed income, but also on top of that, teach you how to properly invest the remaining money in the market and do it through our two-bucket approach.
And again, it's one of those, oh, that's too good to be true. How is that possible? Let's talk about annuities. They are tied to the market, not in the market. That's how you keep that principle. But talk about the strength of the insurance companies. Because, you know, I moved most of my 401k from my anchor career into a fixed index annuity because I didn't want to lose any. And I sleep well at night.
Yes.
How is that possible? Because the insurance companies have never been stronger.
Yeah. So first off, insurance companies are very transparent with their finances, and they're regulated pretty heavily by all the state insurance departments. Yeah. And so every year they have to be audited and their financial strength has to be looked at. So just like we get ratings for bonds, A rating, triple A rating, insurance companies are rated the same way. So when you're looking to put your money with an insurance company, I like to work with A-rated companies, the best of the best.
Right.
Now, there are lots of insurance companies out there that are not A-rated. They could be B-rated, and you can certainly use them. I personally wouldn't myself,
right,
because the annuities I personally own are A-rated. And that's important because your money is backed by the financial strength of that insurance company itself. So it's very important that you work with a big, strong, safe company. And that's why it's so nice to have the rating agencies on our side and going in and auditing and evaluating these companies for us.
And as an independent fiduciary, you can look at every product from every company in the entire world and cherry pick specifically for the clients.
Yeah, that's the most important difference between an independent fiduciary firm and, let's say, a big box store or a big box firm, you know, the big ones.
Yeah.
And I started my career out of them, and I got nothing against them, but there is a specific menu of products that they want their advisors to use.
Only their own products, obviously.
Sometimes proprietary. Sometimes they might have another, you know, company on their what they call their grid, right?
Okay.
But working with an independent today, and you'll see there's a big movement right now where financial advisors are leaving the big box firms and going out and starting their own independent firms because advisors are sick and tired of the big firms telling them what they need to recommend for the client, what companies they need to recommend. And most advisors I know want to do what's in the very best interest of the client and go out there and find the very best company for that person's situation. And so everybody's situation is so unique that you really have to shop the market once you determine what the strategy is. But you have to figure out what the goals are first, and you have to figure out what strategy you're going to use. Only then can you go out and start looking for the actual financial products that will solve the problem. Most of the time, financial planning is done the opposite way, where products are being talked about first, and they're not actually solving the problem. We'll see this a lot where people will have certain goals or certain concerns or problems that they were trying to solve, and the product that they're in is not doing the job that it should be to address that concern. So these are things we can talk about when you come in for your Right Track review. Again, go to onthemoneyoffer.com, get a copy of the book, and schedule your appointment right there, or call 1-888-382-1298. My team is standing by to get you scheduled right now. We'll see you at the office, folks.
And thanks so much for joining us. We hope to see you again next week. Again, there's the number. We're going to send you this book, even pay for the shipping and handling. Thanks for joining us. We'll see you next time.